YouTube, what's going on? This is your boy TerrenceRe, and I'm back with another stock market update. We're gonna go over what's going on in the market. We're gonna talk about some potential trades. We're gonna talk about some trades that I actually have on now, and we're gonna talk about options on futures and diversifying your portfolio right after the buffer. All right. This is a little different. You guys just hear my voice. You don't see my beautiful face. Something's going on with the camera on the platform I'm using. So we're just gonna make it do what it do. Hopefully I can get that remedied for the next video. Right now we got the S&P futures up 56 handles. So a pretty substantial move going on right now. That's about 1.25%. Over here we got the NASDAQ futures up almost 1.5%. The Dow right now is the laggard. The Dow futures are up about 0.90%. And we got the Russell futures up 1.38%. The bonds are actually up as well. We got the bonds up about 0.25%. The notes up about 0.14%. Oil is up almost a whole percent. And gold even showing a little green. The only thing that's down right now is the Bitcoin futures. It's down by 0.5%. So for the most part, we got an up day. I mean, just about everything. Looking at my screen, if you look at my watch list over here to the left, everything is green. One thing I will add, and on the AD, the advanced decline line, you got 395 stocks up out of the S&P 500. So everything's up right now. The home builders are up. You got FANG and big tech up. And the SKU index is under 130, which that's a key for me. If it's under 130, that's bullish, right? So we're gonna look at some. Let's see what we got going on. I got two trades on right now. The last video I did was on the Iron Condor and IWM, and it is actually overall just like down $5, right? It's a slow moving. It's a slow moving coup, you know. It's been open 7 days. It's only a $3 wide, so you're not gonna get that much vol contraction. This is gonna be one of those ones I just be sitting there and holding probably, until it gets like down around 20 days or so, maybe even lower than that. But we'll see. The Russell or the IWM still has an IVR 39.9. So we're just gonna hold that. That's a neutral position. Now we're gonna look at. I'm gonna go into the analyze tab and then we'll do some stuff on there. So just stick with me, and I'm gonna show you how we plan to make money. We just want that particular. So if we're looking at the IWM trade, let's go over here and pull up IWM ETF of the Russell. Now everything want to look crazy. Here we go. So if we bring this over, now this actually gapped up today. So if we're looking at this right here, let's do something. I'm gonna take this EMA off. I don't want that on there. All right. As a matter of fact, yeah, leave it like that. All right. So as you can see, I think I put this on. It's been on for 7 days. So if we count like 1, 2, 3, 4, 5, 6, 7. So I put it on about right here, right? So we had a down move and then up a little bit, and it's just sitting there. So it can go up. I think I'm up way up here, like the call spread is up here at 215, 218. So it can come up into here, bounce, come back down, hopefully. And we just want it to stay within the range, right? Within the range that I sold. So if I go to we're gonna go, let's look at this on the analysis tab and you'll see what I'm talking about. So our iron condor is just two credit spreads. Let's look at the analysis. So if you're looking at it right here, let's move it out just a little bit. You'll see I got a credit spread over here on the put side, right? That's what this is. And then I got a credit spread over here on the call side. And here's the stop price. You just wanted to bounce in here, back and forth in this green area. That's your profit zone. You wanted to stay within this area and then let time go by. So the iron condors are great ways of making trades and not necessarily having to be bullish or bearish. You can just be neutral. And so the past few days, the market has been bouncing back and forth, right? So this is a great market, and you got high volatility. So it's a great market to sell options and not really have to. Um, you don't need the price to really move. You don't want the price to move. Honestly, you just want time to go by, and you wouldn't mind having a little vol contraction, but it's going to be with an iron condor. It's going to be mainly time that you're going to get paid for, unless it's a real wide iron, like at least 5 wide, maybe 10 wide, maybe you go $10 wide, and then you'll see some vol contraction. But for the most part, it's going to be a time trade, right? And that's a way of getting paid for time instead of having to be right directionally. So the other trade that I put on, I just put this trade on, I think yesterday or 2 days ago. And that is I got long in the Australian dollar futures, right? So it's /6A. And let's look at the chart. As soon as it comes up, here we go. So kind of looks like the IWM one, right? So I got long right around in here, maybe like right here somewhere. Let me see. I think it's been on for 2 days. So I got long right here on this day, on this big green candle, right? I seen the wick right here. I got the green candle, and then I put the put spread on. So basically, I sold the put spread down here. I would like to see it continue to go up. You see, this is what we will call a bull flag. Like you got an up day, or 3 up days, or 4, you could say. You got a pullback, and then I got in before the break of the high. So I basically sold the put spread right here. Let's go look at the table. Now with futures, if you're on the options chain, you can see that you see /6AH. So this is the March expiration. Now it's going to change after this, and you'll go into another expiration, which would be right here, right? So from here, from 58 days on down to, you'll see the next 3 expirations. This one, and this one will be a different future. You see /6AM, and then the next one will be U. So futures, this particular futures contract, if I were to hold it, which I won't hold it, if I were to hold it all 23 days, then I would have to roll it out to another futures contract, right? And so it's not like equities. Well, you would have to roll too if your expiration came up, but you don't have to. The futures, like when the futures doesn't change itself, right? So these futures right here, you can see they are priced differently. Like this one is priced, so I'm trading on this one. If I were to trade out here, if I went further out, I'd be trading on this particular price and then this particular price, because they trade out in time. So you have different expirations for these particular futures, and then that can get kind of it's not really something you need to worry about. You would treat it the same way as you would treat an equity, unless you're doing some type of calendarized um, spreads, and you're really paying attention to like backwardation or contango, and you're trying to make money on on the spread. And there are some traders that do it that way. I don't think you got to get into that. Just treat it just like any other option on the equity. Do it the same way. Keep your mechanics the same. I'm not holding this 23 days anyway, right? So I'm not going to worry about having to roll this out. I will close it out before then, way before then. So I actually prefer to be further out, but I didn't want to go into a different expiration. And I wanted to, because I'm directional in this particular trade, I want to be closer to expiration, because then the option will move faster, right? The gamma will kick in a little faster. I want the gamma to kick in on this because it's a directional trade. Now, if we go to the curve tab and we look at it, you'll see the red is obviously where I would lose money. Green is where I would make money. And you can see where the flag is right here. That's where the stock is right now. You can see if we go to the position tab, I'm up like 40 bucks on it right now. Let's go back to the analyze tab. And so now if you look up there, it's a box. You see this box up here. Now I can move this and it's going to simulate my theoretical P&L. You see, if it gets up to right now, it's at 0.7182. Look up here, right? That's what the price of the future is right now. If it gets up to 0.72, I'd be right at 55 bucks. If it gets up to 0.7225, I'll be right at 68. And then you see if it gets right up to 0.7250, I'll be at like P&L theoretically around 80, 82 bucks, right? So I collected, if you look over here, trade price, I collected 0.30, you see 0.00130. That was 130 bucks, right? Now those 130 bucks, I want to make about 50% of it, which would be what, 65 bucks. So I'm gonna buy it back. I already have a working order in to buy it back at 0.006, which will leave me like 70 bucks. And right now the mid price is 0.0009. That's the mid price. So as the numbers are a little bit different with the futures, but that's because you're looking at these ticks up here. But the platform does all of that for you. It's not like you have to do it yourself. So if I came, I'll show you exactly what I'm talking about. If I came in, now I wouldn't do this trade today because you're not going to get as much because the market is moved. So let's say you wanted to come right here and put it on right here, right? Let's say I'm just going to sell this. Excuse me. There we go. I'm going to sell this put at 0.71, which is the 32 delta, which is, if I was doing this trade today, that's probably where I would go. 32 delta, 37 delta, somewhere in there. By the 23, you see it says 0.30, bam, right there, right? It's giving me basically the same, that's around the same thing that I did. Now look, it's telling me that's not right. It's saying max profit 580 bucks. Something ain't right. Let's clear this out and do it again. I think it's because I got this trade on already. Let's see here. I don't think it's going to do it right because I already have a trade on and it's telling me max profit 570. All right, so let's do this. Because I already have a trade on there, let's just go to another currency because it's going to be the same. I just want you guys to be able to see. I'm going to go to the euro, right? 23 days. Let's come right here about the 31, sell that. We'll buy the 22 delta. All right, 0.30, 0.00130. Now, if you're looking at that, you're going to see it says max profit 163, max loss 463, because it's the ticks are different on the euro futures. But it's showing you, it's going to tell you what your max loss is, it's going to tell you what your max profit is. So you don't have to calculate going into the ticks and figuring out what's what. That's all I wanted to show you guys. And it tells you your probability of profit of 71% of doing this trade. Now you're risking more, right? Now the thing with futures is it's not margining the whole 463, it's just margining 367, which is called spam margining, right? So you can Google that up and look that up. It's kind of hard to explain, but so that's one of the things that makes option trading on futures more efficient, more cost effective, because they won't margin you the whole width of the spread, right? So that's one of the benefits of doing options on futures. So one of the things that I want to talk about as far as like diversifying your portfolio, like if you have a portfolio that's heavy in equities, you can come over to the futures market and do some stuff in the futures, because sometimes they move a little different from the market, right? You could be real heavy tech, doesn't matter what direction, but you can come over and trade currencies. Like this is the euro. This is the euro FX futures. I was just looking at the Aussie, so Australian dollar. You can come and you can look at the Canadian dollar. You can look at you can go into commodities, or what they call softs, and do like wheat, soybeans. You can trade metals, of course, gold, silver. Um, excuse me, you can do like natural gas, thing in the energy sector. So there are things that you can do, and in the futures market, they kind of um, offset what you have going on in equities. So all you would need to do is I'm gonna come over here and change my watch. Now I'm on the Tastyworks platform. There'll be a link in the description of this video where you can click on it, open up an account with them. I'm gonna go over here to futures. Now I can click on all. We're just gonna do now if I click on all, it's gonna bring up the micros and the regular one. So we'll just do CME just for here. And so it doesn't have the micros on here. So you got the S&P futures. So if you didn't want to trade like the SPY or the SPX, you can come in here. You got NASDAQ. You all your numbers where you see / like 6, those are currencies. The A, that's the Australian dollar. / 6B is the British pound. / 6C is the Canadian dollar. / 6E is the euro dollar. / 6J is the yen. Now the yen can be looked at. Sometimes you'll see that traders, like if the market is going down, sometimes traders would pile into the yen, because generally it's moving, a little opposite to the market. But as you can see, everything's green now. Only thing red is Bitcoin. And then you got / CL is oil. So you can trade the oil market, and you can do options on these too. / nat gas. / GC, which is gold. / SI, which is silver. / HG, which is copper. Now copper doesn't have options on it. It's not a real liquid in the options market, but you can come over here and just get long like copper, right? So you can just buy it outright. / GE, that's your euro dollar futures. And this is a the reason why you see this just going down like this is because this is basically showing, if I'm not mistaken, I'm about 80% sure that this is one way of tracking like interest rates, right? The probability of interest rate increases. You might want to, do a little digging in on that. I'm about 70-80% on that. So this is one way how they look at like tracking, like raising interest rates, right? And that's why you see it like this, because the Fed has said that they're going to raise rates. And this is one way that you trade that or monitor that. All right. So you can double check me on that though. UB, this is the Ultra T-bond future. ZB, this is your 30-year Treasury bond. ZC, a corn futures. And I think you can trade options on corn futures. See, so these you just have to just make sure you pay attention to the contracts. What I try to do is, for the most part, I trade the contract that's the light color, because that's the one that you see the pricing for up here. Now, when these contracts roll over, like when this one is done, and then they roll to this, to the next one, you'll see the price. This will be the price that will be up here, right? And then these are all different contract specs. So I try to stay in the one with that's lit up. So this one, you can trade this one. It's not that you can't. Probably if I made a trade in corn, this is the one I would trade. But you can see it's trading at a little bit of a different price. Is the vol is actually lower going further out in time, which is a little yeah, I like to pay attention to the IV, because that lets me know that, hey, that maybe that there isn't as much vol priced in further out in time. You have more volatility in the near future in corn. This is the 5-year Treasury. This is the 10-year. ZS, here's your soybean futures. The 2-year Treasury note. And yes, those are fractions up there. But the system will calculate all of that for you if you decide to do that. I actually don't like really doing options in the bonds or the notes, but the system will calculate it for you. I would rather use the TLT, or um, come to the smalls. And the smalls, they have you can trade the yield, like down here, but you don't have options on it, not yet anyway. So you got /S, which means smalls, and then you got 10 years. So that's trading the yield. So that's what the Y stands for. I think I left off on ZW. That's your wheat futures. And then these ones down at the bottom are /S. That means smalls. And I think the only one you can trade futures on is the precious metals. So you can trade precious metals futures on, and they're real, and each tick is like $1. So they made it real easy with these. And so that's one of the reasons why I like Tasty Works, because they do have the smalls, which is exactly that. So like S420, these are your cannabis future contracts. You can't do options on them yet, but you can trade them outright, and each tick is just $1. Just simple as that. And S/SFX, that's the dollar future. So if you want to trade the dollar outright, right? So instead of like buying, so with me getting long the Australian dollar, I'm in essence getting short the US dollar, right? Because they're pitted against one another. But if you just want to trade the dollar futures outright, you can come over here to /SFX. And that's pretty much it. And this is the small crude oil, which is smaller than /CL. So these are all ways, and they even have a small cryptocurrency equity index future. Now, what's so cool about that? So if you try to trade the Bitcoin future, I think it's gonna margin you, like, I think the margin is crazy. Let's go over the active. I'm not 100% sure, but we're gonna look at the active tab. Let's find the Bitcoin futures. See if I can find them, because I just want you to see the difference in trading them. I don't want it on crypto. Maybe I'll come on here and trade some crypto on here as well. You can do that on Tasty as well. CME, BTC. So let's see. What's the margin? If you look over to the right, over here, I'm going to highlight it and then look over here. $117,000 is the buying power to trade these Bitcoin futures, right? Now, let's go to the smalls. We're going to go to the small exchange, right? Now we're going to come find the small cryptocurrency, and you come over here, $825. So you can trade the small cryptocurrency index futures on Tastyworks, and it's only going to margin you like 800 bucks. So that's good money. That's you know, you don't have to use. So there are ways to trade Bitcoin. There are ways to get small, and that's my whole thing, right? You want to trade as much as you can, which sounds crazy, but you want to trade. But when you do it, you want to do trades that put the odds in your favor, and so you want a high number of occurrences, and then you just manage your losses, which is what I'm doing. This is what I'm, doing with this particular account and doing these trades on YouTube, trying to show you guys, right? So far this year, my P&L is what, 180 bucks. We just started with 2 grand, and I think I had one loss in Apple, and then that's it. And so we're just gonna let these two that we got work. As you can see, I wouldn't do this spread right now today. And the reason why I wouldn't do it today, right, is because you got this. I don't like to get long when you got 3 green days in a row, right? So let's say you get a pullback and it pulls down. If you want to get long, then if you want to sell and you want to sell into strength, like you want to get long into what they call buy into weakness or whatever, or excuse me, buy into strength or what, basically doing the opposite of what the market is. If the market's going down, you want to get bullish, right? If the market's going up, you want to get short, right? And within context of what we're talking about in this particular trade. So I wouldn't get long right now unless you trade this outright. Now you can trade this outright and just get long these futures. Now you gotta depend on how large your account is. You want to just buy the Australian dollar, and you would have to put a stop somewhere on here if you wanted to do that, wherever you wanted to put the stop at, right? But that's why I like options, and I don't have to have a stop, because when I sold this, let's go over to the table. Let's look right here. When I sold this right here, and then I bought this particular put, buying this put caps my loss. So I don't need a stop loss. I don't trade, I don't need a stop loss. So by me selling this put, and even at that, it can only go down so far, but this is a future. So I sold the put and then bought this put, that capped my loss right there, right? I can only lose the width of the spread. And then you take off what the premium that I collected. And so, and then that's that. And then you just manage it at this point. You can see I'm already outside of the expected move for the next 23 days. So I'll just sit tight. Now I do have there are ways that I set up my profit targets and stuff like that when they get out. Um, you can schedule, look in the notes and schedule like a one-on-one with me, and I could show you how I do those type of things right there. That's my sauce. But a lot of time, but these trades that I'm doing on here, you guys, the IWM trade, you can most definitely, if you wanted to try and put that on right now, that trade right there ain't bad at all. Actually, though, if I was gonna I would either do it in IWM or the Qs or even the SPY. You can do an iron condor in either one of these. If I was gonna do an iron condor in IWM right now, and it looked like it's breaking up like to the upside, but it might meet some. So right here is why I see it meeting some what you want to call it, resistance. So I'll show you guys. Let's see where I see the resistance at. right here. So if I had to place a bet, which I like doing, I would say somewhere in here is where we're gonna get some resistance. So you get a little resistance right here, right around 210. And my and I'm right here. I got my other credit spread right here in my iron condor. So I would see it. I would say it would hit here and then pull back on here, and then maybe kind of maul a little bit. At least I hope so anyway. Right? Or I had to get out of that iron condor, or I could roll up this side. So there are all types of mechanics, things that I can do, but I'm gonna sit tight. Now I could roll up. I could take this and roll this up. Um, As a matter of fact, let's see what that looks like. Maybe we'll do that. I'll do that live because it's so far out of the money. Improve my cost basis right there. That's a debit. Let's just say we just did it here. Let's say we just rolled up here. I could pick up $9 in credit just by doing that. Just by doing that. But I don't want to do it on an up day. So that's the thing. I don't want to roll up on the up day. I might let it what I might do is see if we get that pullback, right? Watch it, see if it hits here and then pulls back. Or maybe I'll watch this later on in the day. And if we get a little down move, then maybe I'll roll up. Because that's the thing. I'd be rolling up on an up day when I'd get more credit if I rolled up on a down day. But I hope you guys got a lot out of this video. This video right here was one that I kind of got a little bit more technical, got into some things that you can do. You can always rewind it and walk through it again. And if there's something that you want to see me do, if there's a particular trade that you want to see me do, you want to see me model a trade, if you got a stock you want to see me come on here and chart it up or whatever, put it in the comments and I'll do it. Hit the like button, hit the subscribe button, share the video. I'm trying to get to 1,000. Help your boy out. And I appreciate you guys. Go Bengals. Who day?